Hi, everyone. Welcome to the Canadian Passive Investing Show. I'm your host, 𝗖𝗽𝗶𝘁 Benesocky, and I'm joined by my co-host, 𝗖𝗽𝗜 Biniaz. We have another great show for you today. Please like and subscribe as it helps us build our channel and allows us to keep bringing you great content and expert guest speakers. Our mission is to empower investors to earn passive income through real estate investing. So today we're really excited because we're joined by Margaret Kozlark and Christine Hsu. A little bit about Margaret. She spent 20 years working her way up the corporate ladder as an executive for media and market research firms before escaping the grind for real estate. She founded MGH Investments in 2016 and has invested as an LP in properties in Texas, North and South Carolina, and Indianapolis, and is also a GP on a 111-unit complex in Dallas. And she also holds a residential real estate license with Keller Williams. Margaret lives in Norwalk, Connecticut, and she is the mom of 3 amazing kids. Now, a little bit about Christine. She started her career as an R&D food scientist. Wow. 13 years later, she realized the freedom real estate brought to her and her family and pursued that direction full-time in 2020. She currently owns 6 rental properties and is a JV partner on 2 deals across 32 units in North and South Carolina, and also invests as an LP in various multifamily and mobile home park syndications and funds. She lives in White Plains, New York, with her husband and 2 boys. So we're really excited as we believe this interview with Christine and Margaret will bring great value to passive investors looking to invest in real estate private equity, and active investors looking to build a real estate investment firm from the ground up. Welcome, ladies.
Welcome.
Thank you so much for having us.
Wonderful. So why don't we start off with Christine? If you could start off by telling us about your background and your start in real estate, that would be great, please.
Yeah, so great introduction. Thank you for that. I did start off in the corporate world, so kind of climbing the corporate ladder because I thought that was what I was supposed to do, you know, go to college, graduate with your degree, get a job, and then just, you know, work and then retire. So as I was kind of going through that life, I just never really felt like I fit in, and it wasn't really the right environment for me. And it wasn't until further along that after I had kids, I finally realized there's a lot of value with my time. And if I'm not spending my time doing something that fulfills me, like we only have one life to live, right? So I just really started thinking, because that time was so valuable. I wanted to be with my kids. I wanted to do something I enjoyed as well, because I was coming home completely burnt out and just not available even emotionally for my kids and for my husband. So it was around 2019 where I was like, something's got to change. And really, I think my big turning point was my second son being born. And he does have some disabilities too. So really that just kind of punched me in the gut. And I just, I went through a really hard time, and going to work every day to a place that wasn't fulfilling to me made it even harder. So I just started thinking of different ways to still provide for my family, and also do something that I loved. And I always loved real estate. I actually purchased my first home when I was 21 years old, I think, around that time. It was when Obama was giving out the first-time homebuyers credit. So it was more affordable for me to buy a home than to rent. So I bought my first home, and I just loved the process. And from there on, I kept looking at houses, like just properties and real estate. And I don't even know why I was looking at properties. I wasn't like buying anything, but I just loved it. I wanted to see what was out there. So it was just like so exciting to me. And I was like, I really want to do something in real estate, but I didn't know anything about investing. So it wasn't until 2019 I was going through all these struggles, and I was trying to find a different career path, that I landed on investing in real estate. Like, who knew I could invest in real estate? I always thought I had to be, a realtor. And at one point between jobs, I was even thinking about getting my realtor's license, but then I got pregnant, and then that just kind of got pushed by the wayside. So that never happened. But then, I was thinking about a different career move. I was like, oh, I can actually invest in real estate. And instead of trading time for money, I am putting my money to work for me so that I can spend less time working and more time with my family and doing things that I love. So that's really what brought me to real estate. And then, as I was transitioning, I knew about multifamily, and there's a story about how Margaret and I first met. She was kind of one of the first people that I knew in real estate, and it was just out of the blue that we even met. So I didn't know how to start, and I didn't know what I didn't know either. So I met Margaret. She told me about multifamily. I was like, wow, that's amazing, but it's a little too big for me. Like, I don't know that I can be.
And we're going to get into the multifamily question next.
Yeah.
So let Margaret jump in here and give her a start, and then we're going to get into the multifamily.
And then we'll hear about the multifamily.
No worries. Okay, no problem. Thank you. Hello. So, I'm listening to Christine talk, and I'm thinking, yep, that was me climbing up the corporate ladder. I did the whole, started as an analyst making nothing, but worked really hard, made my way up to VP. I was very involved in market research sales. So I worked with a lot of the really large brand names that you guys would have up in Canada, as well as down here in the States. But, like Christine said, I have children. My kids are a little bit older, but I missed a lot of things. I was traveling. There were school plays that I missed. There were sporting events. And, I was always aware that I really wanted something a little bit different. And then for me, there were some changes that were going on in my corporate life, but my mom passed away in 2017, and I had already started investing at that point. And, literally she was on her deathbed and she passed away. And I kind of said to myself, what would my mom want me to do? Would she want me living this great, well-paid career that I'm just not happy with? I feel like she would want me to just go out there and do what makes me happy. And I always loved real estate. I always kind of had an interest in it, which is funny because, by the way, I have like zero design talent, but I love the HGTV shows. I admire it in other people. Ava, you've got it in spades, I can tell. It's not a talent I have, but I always loved when people would invest and make something beautiful. And so I got my residential real estate license, and I started selling homes while I was still passive investing. And that's kind of how I got started in it. And then I met Christine, and we'll get into that probably a little bit later in the show.
Perfect. Yeah. Christine, please go ahead and tell us about multifamily. Absolutely. What was it about this sector that piqued your interest?
Yeah, there were just so many things. So, I had gone the traditional route to learn, but then I really wanted to be a multifamily investor because, one thing that stuck out to me was the economies of scale. Where if you have one vacancy and you're just a rental property investor, then you get no income coming in. You still have to pay your mortgage and your expenses. Whereas if you have like 150 unit in one building, then one vacancy is not going to hurt you very much at all, if that. So just kind of being able to even, spread the resources, and you have a team that's kind of supporting you, because when you're investing by yourself, you're doing everything by yourself and you're overseeing everything on your own. Whereas you have partners in multifamily kind of helping you out, and everyone plays to their own strength. And if there's something that you're not great at, you can find a partner who's good at what you're not great at. And everyone has a vested interest in that. So that's really what stuck out to me in multifamily, is that it's such a team effort. And it's bigger, right? So you can grow bigger as well.
Scalability is there. Absolutely.
Awesome.
Yeah. And I would also add, I find multifamily investing, there's so much generosity from the people in this space, whether it's their willingness to share knowledge or to partner with you, or to sort of, help you with some of those areas that you're not really strong with. And I just very much appreciate that. Everybody in this space is really just lovely.
Yeah, definitely. I can attest to that. Why don't we talk, ladies, about 𝗖𝗣𝗶𝘁, your real estate investment firm? How did the idea come about, and what problem within the real estate investing space are you looking to solve? Let's talk about that.
Well, so for Christine and I both coming from the corporate world, we could really relate to just being busy parents who were making decent salaries, but really were stretched for time, really were getting killed with taxes and didn't really have any ways to invest ourselves that would involve, not a lot of time and effort. In other words, not so much active investing. So we really thought, well, let's look for passive opportunities. She and I were also passive investors ourselves. And so I had seen firsthand the benefits of that. Plus, as a real estate agent and any other professional in the real estate space, the tax benefits from the depreciation strategies were just incredible, and they were helping to offset my personal taxes. So that was really attractive to me, not just from saving time, but from saving money as well. So we're really targeting other busy professionals like ourselves who have families.
Great, great. And you having gone through that process as a passive investor, has allowed you to see how you could help others as well to benefit from this type of real estate investing.
100%. Yeah. And if I can also add, as a real estate agent, 2021 was the most insane year I think I've ever had in my career, like in decades. And so a lot of people I came to meet over the last year were also empty nesters. So people slightly older than Christine and I who decided to take advantage of the market to sell the family home because they made such a great gain. But now they had this money and they needed to invest it somewhere, and they needed to do it quickly before they really, had tax implications. So we were also helping those folks to help that money continue to grow.
Now that's a great problem to solve, is that the tax problems. Everyone's going to love you for that, right?
Tax,
absolutely.
Time, passive income.
Time, passive income, having more time to spend with your family. I love it, ladies.
Yeah.
That's incredible. Why don't we just kind of quickly discuss about the regions that you ladies are kind of, got your eyes on, and why are you looking to invest in those regions?
And the reason we ask that is because we are located here in Canada and we're investing in the US. So we're somewhat remote investors. So talk to us about, your investment firm. Are you investing in your region? Are you investing in other regions? And talk to us about that dynamic.
Yeah. So we're based in the Northeast, and in this area, I would say the numbers don't work quite as well, and we're hit pretty high with property taxes. So for us, our focus is the Southeast because we're seeing a lot of migration and movement towards those areas. A lot of people in the bigger cities and the coastal areas, like where we are in the high cost of living, is kind of migrating down to the south where it's warmer and it's, not as expensive to live. Property taxes are not as high. So those are the areas. I would say the Carolinas, there's a lot of focus on, as well as Georgia, Texas, and Florida. And I have some interest in the Southwest as well, because we have a lot of people from California moving to the Southwest states. So that's something that I think we may explore in the future. But yeah, those are target markets.
And do you focus on partnering with operators in these regions to act as your boots on the ground to assist in managing and value add, creating value to your properties?
Oh, 100%. It's essential to have somebody who's local to the market, whose boots on the ground, has the relationship with the brokers, because the partners we work with ideally are finding these opportunities off market. So we're not getting a lot of competition to buying them, and we're able to buy them at a reasonable price and then force appreciation, by doing a value add strategy.
Great. And are there multiple operating partners that you're looking to possibly partner with?
Mm-hmm. Yeah, there are several that we've had relationships with already, both as LPs, passive. So those were easy ones to go and start with, because it's really important for us, if we are going to recommend to our investor list to invest in a property. Number one, we want to be invested in it with them. And number two, we really want to have confidence that these folks know what they're doing and that they've got a really solid track record.
Nice.
And it also allows you to sit back and cherry pick the best deals that they're offering to you.
Absolutely. We always look at the numbers, 100%.
That's
Great.
Incredible.
Great.
Great business model, ladies. Let's talk about real estate private equity. We all know that raising capital is an essential component of this business, right? So maybe you ladies can talk to us about your experience in raising capital for your deals. Did you approach your friends and family first, or did you have a different strategy that you went about?
So I think raising capital is almost a continuous conversation. I always tell people, I'm never going to sell you anything. Christine and I really look at it as we're offering our friends and family opportunities. If they want to really kind of get off the grind, we're not telling anybody to quit their jobs, but at least to have that opportunity to be building wealth and ideally leaving a legacy for their family. So when I first started hearing about this, which was from a former market research colleague, it was probably about 2 years before I jumped in. And she kept saying to me, you got to do this, you got to do it. And I was like, yeah, I'll look into it. And then she started telling me about these returns she was getting. So finally I thought, okay, I need to get serious. I need to really research this. And so our goal is to really be patient with our friends and family and just provide them with the education and the information so that they can read up on it. And so that when they are ready, we are that educational resource for them, because it's like literally the best kept secret. And I think people would be amazed at how well you can do with this passive investing.
Yeah, that's really cool. And Christine, I think you and I were having a conversation once, and maybe perhaps you showed people your bank statement or something like that, or the types of returns that you were getting, possibly?
I took a screenshot of the summary of my properties. So
Yes.
I was kind of showing them what kind of returns I was getting. This was just even from my rental properties. And it really gave people, people were super interested about that. They started asking questions. They're like, how can I invest? I don't have time to invest. They're like, you quit your job to invest full time. And it is a full-time job, but I don't have the time to do it. But I still want to invest in real estate. So I was like, well, I've got the answer for you. You can invest with us in larger multifamily properties in a syndication. And so it really helps kind of drive the conversation when you're showing actual numbers and returns that you're getting. And it's in real estate. It's pretty amazing.
Awesome.
Absolutely.
If I could share a quick brief story is
Sure.
that my background is in, being a builder, building custom luxury homes and working with many investors who build spec homes, me as a general contractor, and eventually moving on to multifamily. But I was always dealing with investors. So when the idea came about and we started CPI Capital, a real estate private equity firm, my idea was that all of these people who I had made millions of dollars over the years were going to all convert and invest with, in our firm. But again, Margaret, hit the nail on the head is that education is a very important part, because when I approach them and say, hey, listen, I got a deal in Orlando. It's great. You just invest $50K. There's cash flow and appreciation.
Yeah.
A lot of people right away said, oh, I know you as a Vancouver or Canadian builder, developer. We're talking about a deal in Orlando. It's a rental, it's fractional real estate investing. So there was a lot of confusion and I got a lot of no's. These are even people that are good friends of mine, people that had, like I said, had made millions of dollars, investing with me and partnering with me on deals. But I got, I didn't get the response that I was hoping for, is exactly because of that education, because the concept was so foreign to them. So great point that you brought up.
And Margaret and I actually have a conversation. I think we've had this conversation a couple times now, where it's like these types of alternative investments are a little bit foreign to people. They got to wrap their head around it. You know what I mean? So we were talking about that. And that's again where the education comes in, and just continuously talking about it so people can really wrap their head around it. Christine's showing the returns, and then people are like, I want to be part of that.
Well, go ahead, Margaret. You might have wanted to add something.
I was just going to point out, the other thing, to your point, August, is that it's also a very, it's a higher entry point, right? So a lot of times these investments have a minimum investment of $50,000 US. That's a big chunk of cash, even if you're making a lot of money. And you also have to assume on average a 5-year hold, although oftentimes we do liquidate sooner than that. So, number one, that could be money that's earmarked for college or something else. So people have to be ready to make that investment and kind of go for the long haul. But the other thing is sometimes we would talk to them about, well, you could do what's called a self-directed IRA, right? You could take those retirement funds that are sitting there getting killed with mutual fund fees, and you can invest that. And a lot of times people have felt a little more comfortable about that because they weren't going to spend that money for maybe 20, 30 years anyway. So that's a great way to get into it and just sort of test the waters.
Great point.
Well said.
Great point.
Self-directed IRAs. Nice.
All right. On the topic of education and educating our community. So
let's chat about content creation. So are you ladies kind of planning to create content, and what are some mediums you'll be utilizing?
Yeah, so at the start of this year, it's built into our goals for 2022 is to really ramp up our content and to push out more educational content. Um, Not just about, investing, but also about our company 𝗖𝗼𝗜. So for me, I think it's really all about LinkedIn right now. I was part of a challenge, a 10-day challenge that Yona Weiss had put together before the holidays. And I just jumped in and I didn't know what it was about, but I was like, oh, this is cool. But it was posting every single day for 10 days. And you can't break it. Once you break it, you have to start over essentially. And I saw so much reward and benefit from posting every day because it's like the algorithms, as it gets worked and there's more engagement, it reaches farther. So I had people from my past, like my childhood friends that I haven't talked to in a while, people from high school, college, reaching out to me saying, oh, you do real estate now, like what's this all about? And they're super interested. Even people that I've never met contacting me and saying, I want to learn more, I want to invest with you. So really it's just getting the word out as much as possible to just inform people who we are and what investing in real estate syndications and multifamily is all about.
Great, great. LinkedIn is a excellent place to
One of my
create
favorites.
content and connect with people. Everyone's CV is right there to see their
Yes.
background, their everything else. And also there's a stat that I'm not sure how accurate it is still today. This was maybe from a year ago, but only 1% of LinkedIn users post regularly. So when you do start posting, you get noticed right away.
Noticed right away.
Yeah.
Okay, great.
Ladies, talk to us about your goals. Where do you see your company in 5 years? I want to hear about your visions and
Maybe we can start with the first year. So tell us about any goals you have in 2022.
Nice.
And then also in 5 years, tell
Yeah.
us where do you see your trajectory?
Yeah.
Do you have it for me, Christine?
Okay. Yeah, so we have goals to raise at least 5 million by the end of this year. We would like to get in a deal, 1 per quarter, so 4 to 5. And we want to build our investor list. So, we're just starting out. So investor list around like 30 to 40 to around like 100 to 200 by the end of the year. So.
Amazing.
And in terms of, it's not necessarily a 1-year goal, but one of our long-term goals is, both Christine and I have children with special needs. So we really would love to get to a point where we can have a portion of our proceeds that are going for, research, for different special needs to help families who, have those kind of challenges as well.
beautiful.
Amazing.
That's really great,
You ladies are strong, powerful women. So
I'm cheering. I'm like their cheerleader on the side. I'm like, you guys are I can't wait to
gonna
watch you guys grow.
They're going to make great fund managers.
Yes, absolutely.
That's another goal down the road. Absolutely. Right now we're just focusing just on actual syndicated properties, but we do, that's having a fund is one of our goals as well.
Yeah,
Very
but
cool.
just to keep in mind, Margaret, that these are the syndicated deals are pretty much mini funds. You're
That's true.
already a
That is
fund
true.
manager just by putting it, and a lot of CPAs, accountants, they when I say try to differentiate between a syndicated deal and a fund, they associate both together. They just call both of them a fund. So if you're pooling capital into an SPV and single purpose vehicle, they consider that a fund. If it's a fund that continuously raises capital, continually deploys capital, they see that as a fund as well. So you guys, you know how you get knighted or get anointed. So I make you guys.
We've already hit one goal. Woo!
Oh my gosh, you're too funny.
Okay, great.
I have a question for you, ladies. Let's talk about 𝗖𝗼𝗜. Tell me about where did the name come about? I want to hear the story behind the name, please.
I'm giving this to Christine because I give her full credit for this great name.
It's beautiful.
Yeah, so our tagline is invest nobly for impactful returns. We really want to not just, make money for ourselves or for our investors. It's really bringing, a noble cause to also investing. So that's something that can be done with real estate. And that's why we love real estate so much, is because it provides housing for people, your working class people. They have a roof over their heads with what we're working towards. And the impact is like a 360 impact. So our investors are, buying freedom for their families and financial freedom and more time and having their money work for them. And then also, the people on our staff and on our teams, the people that we employ, like property managers and contractors, we're bringing impact to them by giving them jobs, and also, our tenant base and providing housing for them. So it kind of goes all around. And
The win-win-win.
Yeah, go
it's a
ahead,
win-
explain what that is, Ava.
Yeah, the win-win-win. You got your investors winning, you're creating jobs for people, and you're making a better community for people. You're making a better place for people to live. It's just such a beautiful concept, and we're all so lucky to be part of this business. I love that.
Well, and just to piggyback on that too a little bit, we try to focus mainly on Class B properties. So a lot of times, as Christine said, this is really where the heart of the community lives, right? These are the teachers and the firefighters and the cops. And if we can find and help them find a nice place that they can raise their families in a nice, clean environment, improve the surroundings, have things like playgrounds and, public gathering areas. It just kind of, especially with COVID, it's just a great way to give back to some of the people who've done so much for us during this last 2 years, which have been really difficult for people.
Yeah,
Incredible. Well said.
absolutely.
Well said.
Now,
Perfect.
before moving on to our next segment of the show, maybe you ladies can take turns and please tell us, what is your number one advice to a passive investor looking to start investing in real estate private equity?
Particularly since you guys have acted as passive investors and active investors in real estate. So it would be great to get your perspective.
Yeah.
you want
So yeah, I guess I'll go first, and then Christine has a story that I really want her to tell, which is, but for me, I would just say, you know what, just try. Even if you just allocate a little bit of money, give it a try. Especially in real estate, I work with a lot of investors who are very active, right? A lot of flippers, a lot of people who really want to get in there and literally pick up a hammer, and that's great, but you can't scale it. You're kind of doing it one house at a time. And as Christine mentioned, if you fix that flip or maybe you decide to hold it and then you don't have a tenant, you still have to pay your mortgage that month, but you're not having any income coming in to offset it. So my advice would be get educated, find a trusted partner and just give it a try. And most people, it's kind of like getting a tattoo, right? You can never just get one. You invest in that first property, and then you're getting more after it.
Yeah. Just to add to that as well, for those fix and flippers, for people who are somewhat dabbling and involved, it's also great to diversify your investment. Put some of it in passive investing and then have some of it in, your fix and flips or the BRRRR as we call it.
Absolutely. You can still do those too, 100%. Mm-hmm.
Yeah, that is spot on. And that actually relates to me because, I'm a mom first and foremost. That's, I call that my full-time job versus investing in real estate is my part-time job. And I went into the BRRRR space. I was, purchasing distressed rental properties and fixing them up. And doing it one by one in this hot market that we're in. So I was moving pretty slowly and it was sucking a lot of my time. It became a full-time job and that was not my intention because I wanted to be with my kids. So actually Margaret brought me into my first deal as a multifamily passive investor. So, it was great to kind of complement my active investing in the rental properties with the syndications on the passive side. It just really boosted everything up even more so in terms of maximizing my net worth and also the tax benefits around it, because you're getting so much more depreciation from a larger building and it's all passive on top of the depreciation you're getting on your active rental properties.
Right.
So I'm seeing just so much power behind doing both, just because I don't have the time or bandwidth to do all active and scale that way. I would be working days and nights, which, it's not the intention at all.
Yeah.
And the story I was mentioning that I wanted Christine to talk about was just how she has firsthand experienced some of the pain points of being that active property owner. If you want to talk about that one you got.
Exactly. Like just in the past year, all the nightmares that you hear from landlords, I've experienced. So, it started off with the summertime, a car drove into one of my properties, just randomly rammed into my property. It happened on a Saturday morning. So it wasn't like a drunk driver or anything. It was just some strange anomaly that happened.
It was
And yeah, I had to,
actual an accident. It was an actual
Yeah.
accident.
Yeah.
Actual car in the living room. Yeah.
right. Yeah. So I had to deal with that. The tenants were displaced. I had to deal with insurance and just a lot of stress around that. And then a month later, on another rental property, there was a leak in the shower, the second floor shower.
You were
And
telling
it
me about that. Yeah.
Yes, it just flooded the entire living room below. So same thing, had to, figure out how to place the tenants somewhere else. And of course, everyone is just like on edge and angry, and you have to calm everyone's nerves. And then my nerves were pretty high and tense as well. And I'm trying to work with them and work with the insurance companies and the adjusters and contractors to come in and fix. So it's just it was a lot. And I was like, I don't want to be doing this forever. It's overwhelming. So,
As
And
like,
that's what we tell people with passive, right? No tenants, toilets, or termites. It's all just put money in and watch it grow.
yeah.
And you're still investing in a tangible asset.
Yes.
And you're
Yeah,
still
of course.
real
Yeah.
estate and all the other
yeah,
fun
just
stuff.
last comment
Yeah.
about your guys' partnership. Christine is a big compliment to you where Margaret brought you kind of into the passive investing and what have you, but for you guys to end up partnering, that's a big compliment to you, to your work ethic, to your values, to your astuteness, because Margaret seems like a pretty sharp person, and for her to kind of partner with you, that speaks highly of you. So
Yeah, you
that's
guys are great together too.
I would also say that I very much appreciate the trust that Christine put in me, because as we said, you want to look at the numbers of the deal, but at the end of the day, you also want to feel that you can trust the partner that you have. And Christine and I just really kind of hit it off right away. We have a shared background coming from market research, and I think our skills really complement each other nicely. So I appreciate the fact that she felt comfortable in investing in a deal pretty soon.
Yeah, absolutely. And our relationship took time to nurture as well. Like we met at the end of 2019, and it was through the pandemic. We were just texting back and forth, keeping in touch. Every now and then we would check and say, hey, how are you doing? And every time that we did connect, we would after things calmed down, we met for lunch and for coffee just to catch up. And that's kind of where we realized that we had the same goals, and that we also had complementary, character traits and strengths. Where I'm more of I'm more introverted, more analytical, and I like to do systems and processes. Whereas Margaret is more outgoing and really loves to talk with people. So I feel like we kind of play on each other's strengths that way, and we just felt like it was the perfect partnership.
And that's
amazing.
that's incredible.
I think a guy that we all know by the name of Dan Hanford says that if you're going to partner with someone, make sure they compliment you. Make sure both of you are not great at one thing, but
Exactly, right.
Yes, absolutely.
all right, awesome.
Okay.
The next part of our show, we got to the next part. Thank you for all the experiences you shared. I'm sure our viewers will really enjoy it. So we're going to come to the rapid fire of our segment of our show. Now, what we're going to do is we're going to ask the same question from both of you, but we will kind of switch it up. So ask one question from one of you, the next one.
So whatever comes top of mind, ladies, this is called the 10 championship rounds to financial freedom. Okay, so let's start off with you, Margaret.
Okay.
Who was the most influential person in your life?
Oh, that was my dad, for sure. He was just a good guy and solid individual.
Nice. Christine, how about you?
I would say my mom. She sacrificed a lot for us, so she's definitely very influential.
Amazing. All right, Christine, what is the #1 book you'd recommend?
Yes, I have that ready. So I actually have 2. This is really good.
All about leveraging, man.
Yes. And then if this looks familiar, The One Thing.
Oh, cool.
No, I've never heard of that book.
Oh, this one is so good. It's really, you want to focus on the one thing that is your priority. I would highly recommend this for everyone.
Oh, nice. All right, Margaret, what is the #1 book you'd recommend?
So it sounds like such a cliche, but I have to say, of course, Rich Dad, Poor Dad, as well as Think and Grow Rich, which I loved, because I really think that mindset is so important, and you have to really visualize and believe that you can do this, and having a positive mindset will get you so many places so far.
Incredible. All right, Margaret, if you had the opportunity to travel back in time, what advice would you give your younger self?
First of all, I'd say buy Google stock as soon as it comes out. But other than that, I think I would just say, you know what, trust yourself more. You know, I'm a little bit older than Christine, and when I graduated college, everybody was saying, go get a nice secretarial job. And I'm like, I don't want to be a secretary, you know? So I ended up taking a job that paid less, that had better advancement opportunities. So I guess don't settle and believe in yourself, and then the rest will too.
Great advice.
Great advice. Christine, if you had the opportunity to travel back in time, what advice would you give your younger self?
I would have told myself that college is optional.
Okay.
Yeah, and that I tend to go the opposite way of traditional, and that it's okay to do that. It's okay to follow the untraditional path in life. So I would have told myself that, to follow my dreams and my passions.
It's not life or death to go to college like some parents make it seem like. It is important.
It's true.
Yeah, it's true. And we all fall into that. Yeah.
Yeah, absolutely. Now, Christine, what's the best investment you've ever made?
Yes, multifamily syndications.
Nice.
It's the best. Yeah, literally the best investment. It just wins on so many fronts.
Amazing. How about you, Margaret?
Obviously multifamily as but I did have a great stock investment. I bought Priceline back in the 90s, and it doubled in like 2 weeks or something, but I didn't get the gain until I sold it. And then I got the highest tax rate. So really I'd go back to multifamily.
You go back to multifamily. Okay, well, that leads me to my next question. Margaret, what's the worst investment you've ever made, and what lesson did you learn from it?
Oh gosh. Again, I hate to say, it would probably be stocks. I think I jumped on the whole pot bandwagon, or weed, or whatever you want to call it. Oh, you got to buy pot stocks. Everybody's buying pot stocks. So, I put some money in pot stocks, and then shoo. So now I keep telling myself, I'm not even looking at it. It's a long hold. So I don't know that I'll ever get that money back. But I think what I should have done is really listen to people like Warren Buffett. If you're going to go the stock route, which is just invest in what invest in something that, you're not just looking at it because it's a market buzz. So excuse the pun, but yeah.
Okay. And Christine, what's the worst investment you've ever made, and what lesson did you learn?
Yeah. So it's along the same lines. I invested in GameStop when it was going nuts last year.
I didn't even know that.
The Reddit hype. I mean, it wasn't a lot, but I still lost, a couple $1,000, which I would have said, just don't follow the hype.
Yeah.
Okay. Awesome. Next question, Christine. How much would you need in the bank to retire today? What's your number?
I would say probably like 2 or 3 million I would be okay with, because if I put it into things like multifamily syndications, it would continue to grow by itself without me doing anything. So even though I'm in my mid-30s, I would be comfortable with that amount, and I feel like it'll grow itself.
Amazing.
Of course.
And Margaret, how much would you need in the bank to retire today? What's your number?
I would go a little higher. I would go with 5 million, only because what I really would love to do is get to a point where I have a fund that I can just sort of funnel into charities, just to kind of help them. Like charities I believe in. I really am a big person who wants to give back to my community. So I'd love to be able to have a portion of that could always be kind of evergreen and helping other people.
Incredible. All right, Margaret, if you could have dinner with someone dead or alive, who would it be?
Oh my goodness. Honestly, I think it would be Jesus. I'm a really spiritual and religious person, and the world is such a crazy time right now. So I would just love to know, what's the secret to world peace, and how can we just get everybody to get along?
No, that's really nice. And Christine, if you could have dinner with someone dead or alive, who would it be?
The same person, Jesus Christ. I have a lot of questions for him.
It's probably the most common answer.
We've got
to
that.
this.
Oh, is it?
Yeah.
Yes.
Our last guest said the same thing. Yeah, absolutely.
Yeah.
Whitney Sewell
said the same thing.
A couple of
Yeah.
Now, Christine, if you weren't doing what you're doing today, what would you be doing now?
I would say I'm really happy with what I'm doing today. I am where I want to be, but if I was doing something else, I would be volunteering more and just, giving back to the community.
Oh, beautiful. And Margaret, how about you? If you weren't doing what you're doing today, what would you be doing now?
I would be doing something similar. I would definitely be volunteering and would probably have something to do with empowering and educating women to help people lift themselves out of poverty.
Whoop, whoop. Okay, just
Okay.
kidding. Just kidding.
Support the women.
Yeah.
Okay, so here. Okay, Margaret, next question. Book smarts or street smarts?
I think you need a little bit of both, but I'd probably lean towards street smarts.
Okay, and Christine, book smarts or street smarts?
Oh, street smarts all the way.
Nice. Okay, last question. We'll go with Christine. If you had $1 million cash and you had to make one investment today, what would it be?
Oh, it's a no-brainer. I put it in a multifamily syndication. And just
Totally,
let it
it's so
grow.
easy. Me too. Give us a real hard one, Ava.
Okay, amazing. So again, you do multifamily as well. If you had $1 million cash, you had to make one investment today, Margaret, it would be?
It would totally be multifamily because it would be the gift that kept on giving, right? So yes, 100%.
Love to see
That was
passionate girls
great.
like
That
this,
was
right?
great.
These ladies are so passionate about what they do. They want to help others. I have a lot of respect for you both. Thank you so
and
much.
we can't wait to have you guys back on the show. Thank you for being totally transparent and sharing with your journey and your strategies you have in place. Really love listening to you guys, and can't wait to watch your growth.
Yeah, can't wait to see where 𝗖𝗼𝗜 goes, ladies. All the support.
Thank you so much for having us on. We had a great time.
Yes, this was so fun. Thank you both so much.
Thanks, ladies.